happening on the political front, whether it's the state elections in Karnataka or the cabinet rejig at the center. Nilesh, I've been saying this from the start of the show this morning. It's not just about Karnataka elections. Counting down from here, the noise will only get louder when it comes to the prospects of the BJP pretty much holding its ground in the next general election slated for May 2019. And that would pretty much influence the course of the markets from here on. What do you make of the policy and political overhang the markets would have in the interim?
Undoubtedly, the upside of the market will be kept about political stability. In 2004, we had seen when the electorate results were against market expectations, market kind of corrected. 2009 was reversed, where electoral results again came ahead against market expectations, and it went up. So clearly in 2019 also people will be trying to factor in what will be the shape of the government, and that will make them a little bit cautious. However, the underlying trend of the economy is doing reasonably well. We have seen results season coming out quite nicely on the consumption side. And I'll give you just a few anecdotes away from political side. The Avengers Infinity becomes the first Hollywood movie to cross 200 crore. And this needs to be evaluated. Just in 2014 first quarter, the entire Bollywood collection was around 450 crores. So today one Hollywood movie is crossing almost 50% of what all Bollywood movies did in the first quarter of 2014. If we see FMCG numbers coming from various companies, rural consumption is doing well. Microfinance institutions' recovery rates are inching upwards. It shows that rural economy has got its traction. Tractor sales are all-time highs. Commercial vehicle sales, you have to wait in the queue to get the delivery. Baleno still has 4 months waiting period. So all this are indicating that finally the economy has gathered its momentum despite rising interest rates, despite rising crude prices. So the downside of the market will be protected by the economic momentum, and at the same time upside of the market will be kept by what market perceives as the political stability.
So Nilesh, you're saying net-net it's going to be at best a knee-jerk reaction, and within 1 or 2 days this entire event would be priced in, right?
Definitely, because state elections are, one part of India. It's not entire India. And anyway, 12 months are too ahead in taking a call on the election side. But certainly, state elections gives you mood of the electorate. And if the results are favoring political stability, if it gives decisive mandate to a party, then to that extent market will believe that, okay, there is political stability. What market will be worried about is 96, 97 kind of period of coalition government, where economic reforms and economic policies will take a backstage to the political requirements.
No, that indeed is the case. But, I think top of the mind politics will be the discussion point for the markets as we go over the course of the next 12 months, because we have a series of state elections lined up in the run-up to the main elections in May of 2019. Here's another piece of political development which may influence the markets on the sidelines. The cabinet rejig, Piyush Goyal coming in into the finance ministry. What do you make of how that influences the overall sentiment?
I mean, certainly Piyush Bhai is top-ranked chartered accountant, and his understanding of financial markets is probably one of the best in the cabinet. So market will be obviously looking forward with optimism that he will provide that continuity of policy, and he will support he'll support policies which will push economic growth even higher from the current momentum level. And if we see the economic momentum, I mean, for the first time in the month of March, we saw GST collection crossing 1 lakh crore. And in April, we have seen e-way bill introduction. Combination of e-way bill introduction and the economic momentum which is picking up, we think GST collections should start touching 1,05,000 crore, 1,10,000 crore over the rest of the year. So that continuity of policy reforms which will push economic growth higher will be what market will be looking forward to.
Nilesh, though, is it a fear that post-Karnataka elections, depending on whichever way the verdict swings, whether it's a majority by either, the incumbent Congress, or if it's an anti-incumbency wave which wins and BJP goes solo, or if it's a JDS combined with whichever of the parties. Post that, you have Madhya Pradesh, you've got Chhattisgarh, you've got Rajasthan. Is there a fear of the government singing a more populist tune in the run-up to 2019, and that may not go down well with the markets?
See, again, populism ahead of election is what is probably affected by the market. Every government has to win elections, and to win elections, they have to do certain things. But how do you create populism is also important. From market's point of view, good economics is also good politics. We have seen that, that kind of populism getting reflected in various parts. So one was revision of oil prices. Now, ahead of election, generally oil prices have not been revised. It has resulted into higher fiscal deficit and consequently into higher inflation. And higher inflation invariably brings down the government. But by passing the oil price hikes to the consumers, you are keeping your fiscal house in order, and that again puts inflation under check. So from a market point of view, limited populism is fine. But over a period of time, good economics should result into good politics, and that's what our experience of the past says. The second thing which is important is how do you fund this populism? This government has already shown one way where they have monetized toll roads of National Highway Authority and ended up collecting about 9,000 crore. So monetizing your assets, divesting your assets to fund populism is a different ballgame. But if you fund populism through higher fiscal deficit and higher government borrowing program, that invariably ends up increasing interest rates, and that will ultimately go and hit the recovery. So limited populism is fine, and most importantly, how do you fund that populism is even more critical.